Hey there, everybody. Thomas with Basecamp Trading. It is Monday, May 20th, and we're going to take a look really quick here at TradeStation, and more specifically, how to look at the correlation of two different markets on TradeStation. Because this is a question I get all the time, is can I trade whether there's a positive or negative correlation between market A and market B? Can I trade that correlation? So the way that you can look at correlation is very simple. First off, you're going to have a single price chart, right? So we're going to compare the S&P and let's say the Dow. So we'll look at the S&P and the Dow, which are pretty highly correlated. Then what we're going to do is we're going to right click on the background. We're going to go insert symbol and we're going to type @YM. So we're going to add the Dow. So now we've plotted the S&P and the Dow. Now, one thing I typically like to do is I'll take this second chart and I'll just drag it up and put it on the same axis as underlying, so that they're both kind of plotted side by side. And you can see the S&P is the green and the Dow is the orange. Then what we'll want to do is we'll want to add the correlation indicator. So you'll just go to right click, go to insert analysis technique, go to correlation right there, and it'll show up. So we're going to actually make this a little bit longer. This is default set to 14. I'm going to do like 100 period or 100-day correlation. And you can see right now the correlation between the S&P and the Dow is 0.72. Okay, now the way correlation works is 0 means there's no correlation at all. They're not correlated. If it is a positive 1, that means they're perfectly positively correlated, meaning they both go up and they both go down at the same time. So if I put another S&P chart up here and said, okay, is the S&P correlated to the S&P? It would be a positive 1. Yes, they're the exact same thing. If it's a negative 1, that means they're perfectly negatively correlated. Okay, so if it was negative 1, that means when one goes up, the other one goes down. That would be looking at something like the euro and then the dollar index. And they're just about perfectly negatively correlated. Okay, and the closer we get to either 1 or negative 1, the stronger the positive or negative correlation there is. The closer we are to 0, the lower the correlation is, and the less correlated those markets are. Well, one of the number one markets that people always talk about with correlations, and there is a slight correlation between this, is the S&P and bonds. So they say, okay, well, the stock market's going up, bonds should go down. And this is kind of risk off, classic risk off. When money comes out of the market, it typically goes into a safer market, and that safer market is typically bonds or gold, that type of thing. So if we wanted to compare this, though, we're going to change the Dow. We're going to make this 30-year bond. So we'll look at 30-year bonds and the S&P, and you can see we have over time about a negative 0.22 correlation. So yeah, they are somewhat negatively correlated. However, the correlation is not nearly strong enough for us to want to trade just purely based off of the positive or negative correlation, just purely based off the correlation, saying, hey, S&P is going up, so I'm going to go and automatically sell bonds. It doesn't work that way. All right, so keep that in mind. This is how you check correlations, see if markets are good to trade. Whether they're tightly correlated enough to either do something like a spread or to trade, make trading decisions based on their correlation. But that's it for now. I'll see you in the next one. Don't forget to like and subscribe. And until next time, everybody, happy trading.